Let's get this show on the road and we'll just go ahead and start. How about that? There we go. All right, just a little bit of a test. Okay, yeah, Facebook looks good, YouTube looks good. If you're on social media, just let me know if there's some audio issues. But all right, good evening. I hope everyone's had a good weekend so far. We definitely had a good one. We had the meetup in Athens, and that was a lot of fun. Thank you, DJ, for everything. Let's see. We also had a meetup somewhere else. I can't remember where the other guys were meeting up at, but that was a pretty good turnout. And that is the first of many. I know we're already in the talks of having a few more. I know we got a fair amount of members in New York, and we have a fair amount of members out in Texas and California. I know Penny Slayer's already talking about doing one in Houston, I believe. So I think that'll be a lot of fun to do as well at some point. So be on the lookout for any kind of events like that. It was a lot of fun to actually meet up with some of y'all and hang out and just get to know a few of y'all and it's always good to meet some of y'all in person and all that, and I'm looking forward to doing that a few more times, as often as we can, but yeah, that was it. It was really nice. We got to hang out. We ate some good food and had some some beers. But all right. So, yeah, we've going to the market and all that kind of good stuff. So we've had a good start to the year. January, as we know, was pretty darn spectacular. We had a good bullish run there. Then, things kind of died down. In February, things kind of pulled back a decent amount, and we've seen this whipsaw of where sellers got tired down at the lows, and now the buyers got tired up at the highs, and now we had this nice little pullback, and we've had Fed members who basically get paid by the word to speak, and we've had Bullard, we've had who was the other one, Mester, and now recently we had Bostic, and Bullard really kind of shot things down for us uh, last week to start the week off, and then of course Bostic came in and just threw everything that Bullard said out the window. So that's just the market that we're in. I've said it before, these Fed members, they're more like social media influencers than anything. Not to mention they're also non-voting members, but hey, it doesn't matter what I think. It's what the market thinks. For all I know, I'm just an idiot, and here we go. So yeah, last week was a pretty wild ride altogether. So yeah, we had this nice little drawdown to the daily 200 on, if you have your charts up, if you pull it the spy, we had a nice little drawdown to the daily 200, and pretty much the theme of the market right now is we got some traps going on and maybe some short squeezes, and that's just the nature of the beast right now. So we'll see if the bonds are going to continue to play ball like they have been, especially Thursday and Friday. We have these nice little trap candles set up, and then off we've pushed from there, and we'll dive into it in just a second. But I know right now you just got the main screen here, but going to look forward to this week. We do have a Morgan Stanley event. It's going to be happening throughout the week, and there's a bunch of companies out there that are going to be presenting. So you have the Morgan Stanley Technology Media Telecom Conference, and for sure Monday you got Nvidia at 12 o'clock tomorrow. But as far as the economic data goes for Monday, there's really nothing going on. Things don't really heat up until later on in the week. Well, Tuesday we get Powell. We get Powell on Tuesday. He's going to be testifying with the banking committee. And then Tuesday after the bell, we have earnings from Crowd, and we have earnings from Dix. That'll be a good one to pay attention to. Retail, and plus that chart it was pretty decent. Wednesday, we have Powell testifying yet again. Hooray. We also have Spotify doing their investor event. And we also get ADP and Jolt's numbers. So hooray for that. Thursday, we have jobless claims. And then we have JD earnings, Ulta, Oracle, and Docu. And then Friday's a big day. Friday's going to be a pretty darn big day. We got non-farm payrolls, and that's going to be a big one because, well, just in general, we've seen that the jobless data continues to be pretty resilient. And Barclays even suggests that if there is another blowout, uh, then that could lock in the idea of a 50 basis point rate hike for March, which is not this week but the following week. So we definitely want to pay attention to all the data that's coming out this week. Not to mention we got the Powell testimony 2 days in a row. So yeah, that could signal what's to come next, of course. And I mean, Powell, he came in and said disinflation like 11 times. How are you going to backtrack from that? But like I said, you've had Bullard come out and then you've had Bostic come out and say a few things and just totally spin things around. So, who knows at this point? We're just here for the ride, and we got our levels that we can play off of, and we certainly will. Thursday and Friday, those were some big days. We've had bond reversals. Thank you, Mr. Bostic. And I don't think anybody was going to be. Uh, I don't think anybody was really anticipating this type of move on Thursday and Friday. Just absolutely, pretty wild. And now we just have to look at, where are we likely to go to next, right? Um, sure, we have a little bit, especially if you're looking at this daily squeeze here on the bottom right, you can see where we did get a nice little shift from red to yellow. This is generally bullish. We closed right at last week's highs at 404.16 and even got a nice little move above it and closed right at the highs. So I mean, you can see that momentum is slowly shifting here, especially for the bull side. And if you would have asked me, last week, the higher probability move was definitely going to be to the downside, especially with the way that bonds were going, the way that TNX was moving. It looked a little bleak out there. So, now that we've gotten these moves on Thursday and Friday, and if you review the notes that we had the prior week, you can see that the bulls did exactly what they needed to do to hold on. You can see that there was this nice little move to the daily 200, and you can see where bears pushed it down. But guess what? This is a trap right here. Bulls like stepped up exactly where they needed to, right at that 393.50, 393 zone, and just shot things on up to the upside. We got above the daily 50. We got above the year to date VWAP. We even got above the daily 21. We're back above the weekly 50. I mean, what better move could you have possibly asked for as a market bull? So yeah, things are looking pretty good here. I would say that. I would say so. Um, yeah, the way that I'm going to approach this week is first things I want to pay attention to the bonds, and I'm definitely going to pay attention to see how well things respond as far as a pullback, at least a pullback to the hourly 50 simple. If you want to be a more aggressive, you can use a pullback to the hourly 21 EMA and see how things react around there. But for the most part, I want to see how well things handle a pullback. If we take a look at the SPY here, we'll just start off with the SPY. Very solid. We came to the daily 200. You got this little bit of a trap move here, and you bounced off. So as far as things go, we're gonna use our support levels here at the year-to-date VWAP at around 400, and below 400 you got about 397, 398, and then of course we'll continue to use the daily 200 down here at about 393 if we have to. Now, as far as resistance goes, for the SPY, you got about this 404, 405 zone. Then you got 407 right here with this hammer candle. And then, of course, we got a good bit of overhead up here at about, let's see, that's about 414 to 418. So once we kind of get above this, we do get a nice little slingshot here to 414. But of course, this is going to be a lot of supply that the market is going to have to deal with. We know that the market likes to move from supply to demand. And we had demand build up here. You had that nice little trap set up, and then now we're off to the races. So yeah, things are looking pretty good here for the SPY as far as momentum goes, as far as squeezes goes, and we'll just kind of jump into it. But I am going to use the SPY as my main proxy for everything. And if we go to the Nasdaq, you can see it's pretty much the same story here. Nasdaq, nice move here. You had almost, I mean, you can see it. You had this nice breakdown below the daily 200. And if we would have lost this and really had a daily close, if we had a close down here, I mean, things could have gotten real messy real quick. I mean, you're talking about 280 to start with, and then ultimately you could even possibly, you don't get a nice little demand zone up until about 260. All right, so we didn't get that. Instead, we had this nice little trap setup situation where they cracked below and bull stepped up, and now off you go. You just slingshot to the upside, and you can even see you get even the good momentum here on the weekly chart here. You got good volume coming in. Just the same setup as everything else, but this has the potential to squeeze even higher, and the reason for that is because of the bonds and the yields and the dollar. So when you have higher yields, of course, that's going to affect a lot of the tech and software guys. So we're going to also be paying attention to, in fact, a lot of my individual names that I'm going to be paying attention to is going to be mainly in the tech sector. If we look at the Dow, I'm not going to spend too much time here on the Dow because the Dow is, everything's going to be pretty much be moving in unison. Sure, it had a great move off this 325 level and pushed on higher, but there's not as much meat left in the bone. You can still see where it still needs to kind of come back and retest the daily year to date VWAP as well as the daily 50 at 335. This is going to be a pretty decent resistance zone here for the diamonds. So that will be kind of interesting, but if SPY is going to be moving and tech is going to be moving and the bonds continue to do what they need to do, then sure, we should get above this zone. And if we do get a close above 335 on the Dow, then that could signal that things can definitely push on higher. But for now, 335 is definitely going to be a pretty decent resistance level. But from my personal view, I think your tech guys are going to be probably your better payout to the upside if we do get it. Moving on to the IWM. Now, in terms of structure uh, and momentum, yeah, IWM is probably the best looking out of everything, but uh, I'd just prefer to play tech. I mean, you could very well play IWM here and take a route all the way up to 194, 195. Once you get to about 195, I don't think there shouldn't be any reason why we can't retest 200 and maybe even print a new weekly high here, which would put you right at about this 202 mark. So yeah, the IWM definitely has a lot of potential here, but like I said, a lot of things out there are going to be moving in unison, and that's why I'm going to be mainly focusing in on a lot of the tech guys, and I'll kind of get into individual names as we dive on in. As far as if we want to take a look at the dollar, our rules last week were pretty simple. As long as the dollar remains below 105, then that is bullish. If we get above 105, that's when, we pretty much turn, our hats the other way and we become bearish. You can see last week, I mean, we wrestled with it. I mean, we wrestled with 105 all last week, and we just couldn't do it. Or market bears couldn't do it, or bullish dollar couldn't do it. So the dollar continues to remain subdued. So here's what you're still going to want to use this level here. As long as we stay below 105, you can you can stay bullish. Even better, if this thing cracks 103 and just absolutely just falls on down, then that's very bullish for the market. But if we do get that close above 105, that's when we need to turn things around and start being bears once again. So yeah, the dollar is, it's not playing ball here at all, especially if you're a market bear. I mean, this thing's just the longer this thing lingers like this, the higher probability that this thing's going to just fall on down. It's going to run out of gas. It's just going to run out of steam, and it's just going to fall down. And you can kind of see that too. We can look at the yen here, the USD JPY. I typed in yen, but USD JPY. Look at the dollar to yen. You had this pretty decent rejection here at the daily 200, and you can use this too. You can have an alert set up right here at about that 137.50 mark, and if you get triggered above this, I mean, yeah, this would be a pretty bad news if you're a bull. But if you're a bear, this is what you want to see this thing just shoot on up. But for now, as long as you're below this daily 200 here at 137, this thing looks pretty rough here as far as everything goes. So, you know, just mainly resistance at the daily 200. Place that alert at 137.50, 138. Above this level, then pretty much the bull argument just goes out the window. So it's pretty straightforward, which is nice because we're at this point in the market where things are pretty simple. There's not much tape that you have to kind of read into. You can pretty much say, okay, if the dollar is above 105, I can be bearish. If the USD JPY gets above 138, that's also a bearish signal, so I can be a bear. But right now, yeah, I mean, everything's just kind of stuck. And if we move into the bonds, which is going to be pretty much the bond, you could use the 30 year as well. ZT is the 2 year, but I like the ZT as well. Let me zoom in just a little bit here. Let's take a look at the bonds. All right, so just to show you this, draw a line from your prior low right here and go all the way across. Nice double bottom pattern. You had follow through on Friday. You really do have a good opportunity for this thing to continue to push on up to the daily 21 EMA. So you definitely have, and I mean, you can see the trap too. Let me kind of clear this out. You see this little wick here where market bears try to just absolutely flush this thing. And you're definitely deeply oversold. Granted, things that are oversold can continue to be oversold. What is weak can continue to be weak. And you can see this thing has just absolutely been hammered. You even have this move here on the weekly chart where we came up to the weekly 21, rejected it, had a little bit, this incredible supply here, and they've just kind of flushed it. But now what you've had going on here is you got this nice little double bottom. Can see where they wicked it, and now they're trying to push it on back up. So this ultimately is pretty a good sign. You even have the momentum shifting here from red to yellow. That's it's not the most bullish thing, but it's still moving from super bearish to kind of neutral at this point. But you can see here that if this continues to push higher, that is good for risk on assets. Now, if we get that flush, though, say if we get a crack below Thursday's lows, if this thing just absolutely loses that Thursday low, that's when you can become bearish. So as long as we hold this and push higher, you're good to go long. That's just it, plain and simple. And you can also use ZB as well, the 30-year bond. The 30-year bond looks fantastic. If you want to use this one too, I mean, here's your low here, your prior low, and we came down, kind of played with it a little bit, and look at this. You get this big, I mean, we've seen this pattern before. We've talked about it a few times. You get this little bit of a top hat pattern, so to speak. You get that trap. You could call this, an island candle here, and it just blasts off and reverses back into the bear's face. I mean, they tried to shoot it down and they tried to scare everybody out, but I mean, bulls just came up and just ripped this thing back on up. So if this continues to push on forward, yeah, this looks, pretty darn good. You can use this as a, a bottom to kind of trade off of, in which if they do flush it down, you can use that as a hard stop on any kind of long that you may have. So for now, things are looking pretty darn good. If we take a look at the junk bonds, and I know I made that comment on, I think it was Wednesday, that it was kind of weird that they were buying up junk bonds, but they weren't buying up actual government guaranteed money bonds. And this thing was kind of doing its thing. But same rules apply here. If you want to use HYG as your guide, this is your corporate junk bonds. You still got to get above 75. This is still a lot of overhead. You got your year to date VWAP, you got your 50, you got your 200, and then you got a nice little supply zone. So you got a lot of confluence here at this 75 level. I know I just drew all over the screen, but it just gives that nice visual representation of, what all is happening here at that 75 mark. So once we do get above 75, I mean, this thing is looking a lot better. It gets into, you're starting to play into better dynamics, bullish dynamics at that point, especially once you push on towards 77. Now, you could use the HYG as like your stops. You can use this low from Thursday as your stop. But as long as this thing continues to push, and especially above 75, yeah, this looks pretty good here for now. So you definitely have your tradable low if you want to use that. But if I were to pick one, I like the 2-year bond, the 2-year or the 30-year, whichever one you want to use. Um, you can also use the TNX. Let's go to the 10-year. This is your rate. Yeah, same situation here. Let me get rid of this line here and kind of zoom in, and you get that trap situation. You get the nice little bull trap. So here, tight consolidation, right? Look what they did. Thursday, oh man, they blasted this thing off, and I was like, this is not good. And then, of course, Friday, they got shot down. Look at this. I mean, that top hat pattern, you get shot down, rates come all the way down. Now, if they want to send this on further down, I mean, look, I mean, this thing can get nasty pretty darn quick. And I mean, like I said, we've seen this pattern happen time and time again, especially on the main indices and even gold. Gold, just trappy all around. I mean, well, you even had this trap here where they held the daily 200. This was the main one we talked about. And look at what's happening up here. You're getting that same little trap pattern. Nice, nice bear trap here. Nice bull trap up here. Especially if they can flush this thing. If this thing flushes below 39, oh man, this is game on for market bulls. Uh, on the other side of that spectrum, if they get a nice little push above 40.9, or you could just say 41, if you get a close above this, yeah, you put you put your bear cap back on, no doubt about that. So yeah, so I mean, as you can see, it's kind of getting redundant here, but you got several different avenues that you can pay attention to help guide you in this market. So TNX above 41, if the bonds push back, to the lows, you can be bearish. If the dollar gets above 105, you can be bearish. But as long as that, doesn't happen, you're pretty much good to go long. So it just keeps saying, just keep things simple. Don't try to overcomplicate things. Don't try to bring in more noise that shouldn't be there. That's pretty much the whole point. Why make life hard on you when you don't have to? Yeah, we'll take a look at AMC. I'd be happy to take a look at AMC. Let's see. Let's continue on here. Crude oil. You had this big reversal candle on Friday. This is a start. All right, this is a start, especially if you are an energy and oil fanboy, this is a start. This is what you kind of want to see, but you still have to get above this 82.60, 82.65 resistance zone. Once you get above this, yeah, I mean, you're looking a lot better. All you got to do is deal with the dynamic 200, which is, can be fine. Um, just you can just have a stop here at 76. I think this is a start. Sure, you're in this mess and you're sideways, but you have a tradable spot here, tradable low, if you will. Yeah, nothing to really complain or be overly excited about, but it's a start. Let's go to Nat Gas real quick. Nat Gas, it's just, I mean, this weekly reversal, fantastic. You can use $2 as your low. Granted, it's had a nasty gap down to start the evening off. I think, Professor in chat earlier this evening was like, yeah, they call it the Widowmaker. But as you can see, I mean, this thing gapped down kind of aggressively. So we might have to pay attention to it. I'm not in anything nat gas related, which is good. But yeah, this is more signs of life here for natural gas. I think it does have potential really try to push back up to the 3.5 mark. Well, it's already at about that 3. So yeah, 3.5 to 4 maybe. We'll see. Yeah, it is what it is. I'm not overly excited. I'm not playing nat gas. I don't like to play knife catching and all that kind of good jazz. So I'd just like to watch it just to see what's going on, or if there's any nat gas plays that we could potentially play reversals. But if you are in a natural gas play, you do have your tradable bottom. Granted, uh, it's still a little sloppy. If you take today's candle, it looks like the weekly looks a little bit ugly, but for the most part, it's okay. It's just damaged goods, and it's going to take a long time for nat gas to really repair itself. Because I mean, if you zoom out, I mean, look at this chart. I mean, this chart is ugly, and this is why you don't catch a falling knife. I mean, where's support? Is it here? Nope. Was it back here at the 250 mark? Nope, it wasn't. And then finally, it kind of found this reversal down here at the $2 mark. So you could still use $2 as your line in the sand, but yeah, for me, it's just kind of damaged goods, and I don't really care too much for it. Let's see. Let's go to Bitcoin. I think Bitcoin's had a little bit of a rough go as of lately. You zoom out. Let's see. Yeah, Bitcoin not too impressive. Today it doesn't seem like. You know, let me know when this thing gets over 25, 26K. Simple as that. I don't want to be overly bullish again until we get over this. Now you do have this nice little collapse here. You're going to want to see this 21,300 level hold. You could use the year-to-date VWAP at 22. So this is my zone to hold, but I'm not too excited about Bitcoin unless it gets back over 25, 26K. Yeah, nothing exciting. Let's see. All right, I think that's all the main guys. We can jump into some individual names. I know someone already requested AMC, so we'll definitely look into AMC. But the main focus is pretty straightforward, which is nice. We like nice. We like nice and easy. Focus will be primarily focusing in on the SPY. I then want to focus in on the bonds, primarily with ZT. You can also use TNX. I like to watch TNX too. Most things are going to be moving in unison, which makes things a lot more easier. So bonds, the dollar needs to remain under 105. If it gets under 103, fantastic, especially if you are a market bull. And then, of course, we'll pay attention to our market internals. You can track the bonds with the TNX, ZB, ZN, ZT, HYG, whichever one you prefer. Like I said, I like the TNX and I like ZT. They all show the same thing. So whatever one you want to use, or whichever one you're more familiar with watching, use that one. If the bonds do short squeeze, they've been beat up to a pulp. There's a lot of shorts in there, and a lot of shorts. They could get squeezed. If that happens, we're going to see a short squeeze rally with the Nasdaq, because when you have these high rates and they're shorting the bonds, what they're also doing is most likely they're shorting tech. So most likely, if we do get a nice run up, it's going to be coming in from tech. So I want to pay attention to tech guys. I want to be watching any kind of software name. I know CrowdStrike has earnings later on this week, but we've already seen some good moves from CRM and Okta and all those kind of guys. Microsoft will be a good one to watch this week. Um, let's see, industrials look pretty decent. Semiconductors are looking pretty good. Nvidia looks fantastic. Um, so yeah, the rules are pretty simple. ZT below Thursday's lows, then that kind of invalidates the bull thesis. The dollar above 105. If the dollar gets above 105, the bull thesis is out the window. If the let's see, if SPY or the Nasdaq closed below their Thursday's lows, then yeah, we're off to a downside, windfall from that point. So yeah, just keep things simple. What I like about where things are right now is the market is at a point where we can do that. There's nothing too overly complex about what is going on right now. The only outside variables that we have is Powell, and we got some economic data. Now, none of that might not matter, but we can pretty much use the movement of the bonds and the dollar to pinpoint where things can possibly go. And right now, I think the higher probability trade is most definitely to the upside. All right, let's see. Let's go ahead. AMC. I think that kind of we'll go ahead and jump into some of these ticker names. If y'all have any ticker requests, feel free to shout them out, and we'll be sure to take a look at them. Let's see. We got AMC, EMB, ET. Yeah, we'll take a look at them all. Throw them at me. Throw them at me. We'll take a look at what y'all like, and then I'll show you what I like. All right, AMC, everyone's favorite short. Professor's favorite short, I should say. All right, you have this nice resistance at 8. If I'm not bullish on this thing until you get above this level. You even got the daily 200 950. Yeah, once you get above this, I think you're in a lot better shape. But look where you're at. I mean, off of earnings, and now you get to vote. This company and this CEO, it's fundamentally trash. We can all agree this company is trash. They can't even sell popcorn. So I mean, whatever you think about it, I don't really care. What I'm looking at this chart, sure, you're sideways, you're holding on for dear life. Um, you can use this low here at 6 as your tradable low. If you break this, yeah, I'm shorting this thing back down to like 4.5, or maybe eventually 0. You got this nice line at 377 as well. So I'm bullish. I'm super I wouldn't say super bullish. I'm more bullish above 8 to 950, and then bearish below 6. Once you break 6, yeah, I think it gets a little bit riskier. Here, I'll remove that white line, but below 6, you can hit 450. Below 450, you got 375. Uh, if you want to do a day trade or anything like that, just continue to use the prior day's highs and staircase back up to 8. And then just mind your P's and Q's once you get into this supply zone here at about that 8 to 950 level there. So yeah, AMC fundamentally, we can have that debate, but I'll probably just upset a few people on social media, but it is what it is in my opinion. If you're an AMC ape, let me know and tell me why. Let's see. So yeah, there's my thoughts on AMC. Let's go to EMB. This is an ETF. What do they do? AP Morgan US dollar. Yeah, this is an interesting little proxy, I guess, if you want to use it. Yeah, this thing looks exactly like the dollar. Let's go over here to the dollar. Just pull that up real quick. Yeah, this looks exactly like the dollar. So, it's kind of nice that they do it like that sometimes. All right, so here on EMB, Look at this trap. You had that trap, they shot it down. You have this trap, shooting it back up. Inverse head and shoulder off the huge. So you're talking about way, way on back, way on back. Off the 2020 pivot. You might have to show me your chart to show me what you're looking at there. Let me see here. Okay, weekly chart, you can kind of see it. So there's your left shoulder, there's your head. Here's your right shoulder. So yeah, above 90. Crack 90. Yeah, this thing can push on higher. So that is pretty interesting. So what is this ETF and what does it do? I don't want to read the prospectus. Not right now. Emerging market bond ETF. Okay. Yeah. So above 90. I mean, we know that. Emerging markets are looking pretty darn good. Yeah, I like the looks of this above 90. I would have an alert set up at 90, but you have to have a weekly close above 90 for this to trigger. So it might take some time to set up. You got a nice little picture there. If that's what that's what I see at least. You may have to show me what you see if you see something different. But yeah, scroll over more to some left. Okay. On the This is a weekly chart, by the way. So let me give this some more time frame. Let's go 10 years. Yeah, you may have to show me what you see. Let me pull up the month. Because you can see where this is nothing but Darvis box at that point. You had that first breakdown back into the range. Now you broke down again. Yeah, I mean, oh, so you're saying this is the left shoulder, this is the head. I mean, if you're looking at it from that perspective, I mean, this has a long way to go. if you're looking for that to be an inverse head and shoulder to play out, this is going to take years to set up, and you have a long time before it even confirms. So if you're talking about that's the left shoulder, this is the head. I mean, your neckline's all the way up here. So you got a long way to go. Now there is this other one that we pointed out on the weekly. I'm not saying that you're wrong. I'm just saying like now if you're looking at, this one, if you want to play this one, this is a lot more shorter term, which is nice. So it's funny that you say that you're looking at a different one, but there's also that one as well. You may have to draw it up on your end and send it so I can look at what you're looking at exactly, just so that we're on the same page there. Hopefully, I'm not confusing. But that's the one that I see. Yeah, an inverse head and shoulder is bullish. You just have to have a confirmation above the neckline. And if you want to use the neckline, I mean that's all the way up here. Yeah, feel free to shoot that over. Oh, that is right. Okay. Well, there you go. Yeah, yeah. I like it. If you're looking at the smaller time frame, 90. If you're looking at the other one, it might take some time. EMB, yeah, interesting. Let's see. ET phone home energy transfer. This one's interesting. All right, so we have a nice little. All right, so you still have nice little trend here. Here's your low, higher low, higher low, higher low. Nice consolidation here. So basically, you're looking for a decent push up above 1350. Nice little flag pattern. I mean, you could use this trend line right here as your alert if you want. Put an alert on this trend line. That'll signal your entry. 1350. You have two questions. You can either add on At this point, if you think things are going to push on ahead, if you do, you can use your fib extensions as your targets. In this case, you can use the pole. You can use the pole, and your targets are going to be up here towards the 15, 20 to even 16 level here. Yeah, this one looks pretty. This one looks pretty decent. Now, it's not like a all-time high breakout. It's like a 52-week high breakout, but it's definitely making progress, and is definitely a lot more bullish than what it has been. If you look at this monthly chart, you can see how beat up this thing has been. It went from 35 all the way down to 375. You went into penny land at that point. So you've definitely recovered here. It looks like you had, a muted move on earnings, and you've kind of come back up. If you're looking to get short, yeah, use these lows here to invalidate your bull flag. You can use 1270, the daily 50 at 1250. Once you lose that, I mean, your next support isn't all the way down until about that 11 mark. So if you happen to lose this, I mean, you have a lot of air right here to kind of tip on over. So could be a good short, but can also be a good long. I like this trend line here. If you want to do a trend line break to the upside to this 1350 mark. Once you get above 1350, yeah, you got a nice little play to about that 16 level. So I think you got a good risk to reward here. Um, let's see, 1350. You closed at 1305. So you got about a 50-cent reward here with about a 30-cent stop. So it's not too bad. It's not too bad. I mean, if you're already in, you should be okay. Would I short on an uptrend though? I would, if I wasn't in, I'd see what happens at this 1350 level. But in general idea, no, I'd rather not short against the trend there. But you have this shorter term trend with an overall like downtrend. So it's kind of interesting. But yeah, you got this nice little uptrend. Now, if you do get a rejection here, say if you kind of get this little move to 1350 and you wick here, if you wick here and form a nice little hammer, then yeah, then I'd short it back down. But at this point, I think your odds are to push back up to 1350. I would only look to short if it breaks 1260, because look, you don't have much support until you get all the way back down to 1160, 1175. You got nice little demand here. A lot of demand here, some resistance supply up here at 1350. Well, you got some demand right here too. So yeah, we know markets move supply to supply or demand to supply, supply to demand. So if you lose that, that's where you're going. But right now it looks like it wants to push that 1350. Here, welcome booze. All right, Preston Box L. I've heard of this before. Box Light. Penny name. Uh do we have any guys in Box L? Wonder if Penny Slayer is there in Box L. All right, let's see. Okay, so pennies. All right, you got earnings coming up. Definitely want to take notice of that. Let's see. Is this a high short interest name? High short interest. So let's see. Let's take our look at our high short interest. Looks like we still got SI. Yeah, Silvergate's very high short interest. Bed Bath and Beyond, Carvana, Upstart, Novavax. Novavax, they came out with their earnings and they even said that we don't even know if we can function anymore. How bad can you how bad can it be? That's pretty bad. AMC has a 25% short float if that interests you. Boxell. Nope, I don't see Boxell on this list, so that's good. Well, depends on how you want to look at that. Let's see. Okay, so you had this nice little run up. Looks like there was some kind of news or catalyst event here. Keep in mind, I do not care about fundamentals a whole lot. Yeah, I do in a way, but I don't. I like to play the charts. The charts tell me a lot more. Okay, so nice little trend line here. You get what I'm saying. I care about fundamentals in its own way, but I am a technical analyst at heart. All right, so you're trying to hold this 51 cent, 50 cent mark. Yeah, if you lose 50 cents, I mean, look where your next zone is down here at 40. So you got a nice little 10 cent mark. You could use this trend line as a dynamic support here at about 45 cents. So you got that nice little 5 cent increment. If you lose 50, you go to 45. You lose 45, you go down to 40 cent support. If you lose 40 cent, you got 35 cent. It's kind of a nice chart. You got easy levels to kind of mess with. Um, Ideally, whatever news it was, it's just been kind of a fade event since then. You can try at 50 cents. I would just have a hard stop down here at 50 if things break. 40 cents is a pretty decent level too. You got good levels to work with. It's just not my cup of tea. That's why I was wondering. I wonder if Penny or if anybody else has a play on box L. Let me zoom in on this weekly chart. I mean, well, look at this. I mean, you were trading at $10 and now you pushed back down here. You lost this low, 33 cents. Yeah, okay, you got a nice little trap there. All right, so that makes sense. 80 cents. Okay, I can work with that. So 50 cents to hold to push back up to 80 cents. I'm really not a huge fan if this thing drops down towards 40. It's a lot of air pockets. I know penny stocks, it's as you get it or you don't. And you got earnings coming up. I'd be curious to see what earnings does, if anything. Momentum is waning. You can see here on the TTM squeeze how you had this nice little movement to the upside, and you're just kind of fading here, and you can see it in price things where it's just kind of fading. Nice volume bar, but okay, so you got a nice little healthy pullback, big volume push, low volume pullback. Hold 50, I think you're good. If you hold 50, I'm okay with being long here. If you lose 50, I'm not interested. And definitely not interested if you lose 45, 40. That's for darn sure. If you lose 45, yeah, I think this thing can push back down to 35, maybe even the lows here at 26. I'd just be careful, especially with earnings coming up in what, next week, 2 weeks, give or take. So yeah, 30 your target if you hold 50 cents. You're welcome, man. Hope that helps. Let me know if you have any questions on anything. I'll write it down. I'll keep a track on it for sure. Maybe I'll buy a share or two. Let's see. ET. Did we look at ET? Yeah, we did. We looked at ET. Devin. DVN. All right. Let's see. I can get rid of this, I do believe. Yeah, I can get rid of this fib because it doesn't make sense anymore. I can get rid of that. Just kind of clear up my chart a little bit so I can mess with a nice canvas here. Okay. Star levels. What is that? 79. Nice little double top action there. Send it on down. 79. All right. So you're trading below the 50 year to date VWAP, daily 21, daily 200. You could have a tradable low here at 52.50. If you get back below 52.50, I think it's a short to this 48, 49 level. I don't really want to be bullish on this until we get above this mess right here. You can see all this dynamic resistance here with all the moving averages. You also have a little bit of a gap resistance here at about the 50 mark. Yeah, I'd like to see if this thing you're kinda in the middle of this range between 50, excuse me, what is that number I drew over it? 59. Gap resistance 59, and then you got your support down here at about 52.50. You're kinda in the middle of it all. It's in no man's land for me. If you break below this, yeah, I'm shorting it. If you get above this, you can gap fill play to 62.50, and then once you get above 65, I think it's a lot better. It's a lot more bullish here. Really bullish, somewhat bullish, and then I'm bearish. I'm a bear down here. You're just kinda in the middle of it. That'd be neat if we can come back up here and tap here and see what happens, how it reacts to the gap resistance, and then fade it back to the downside. It looks like a juicy short, um, regardless. I think it has a higher probability of pushing down. You also got dividend being paid out soon. You got a nice little 89-cent dividend, which is looks like they've cut their dividend quite a bit here. Well, they had $1 dividend, then a dollar 27, well, a dollar 48, dollar 27, almost $3 here. Wow. Buck 55, almost $3. Dividends all over the place. Yeah, very very erratic dividend. Yeah, that's my opinion. I like that one. I'm gonna write that one down too, Devin. Devin. We had a guy in college. His name was Devin, so we always just called him Devin. Let's see. I like that one. SCCO, Southern Copper. Ooh, hello. Look at this. Oh, you can still see where we had some targets that we didn't hit. All right, needs to get above. Well, first of all, it needs to get above 79.32. Look at this thing. Nice height range right here. 78. A little bit of a fake out here and trying to break back above. Good daily close on Friday. Very good daily close. Can very well push back up towards 83.30. That will be your all-time high breakout on Southern Copper. Let's take a look. I know we didn't really take a look here at copper futures HG. Okay, this is interesting. Now copper did lead this charge up. I mean, this was nice. And then you had this nice little trap here. Couldn't push back up and you flushed a little bit. Now you got a bunch of this back and forth shenanigans. So this is like your typical who's in charge here. You know, you got a bunch of back and forth between bulls and the bears. I'd probably give the favor to the bulls for now. I'm not bearish on copper unless you break $4. And then I think you really need to kind of get above 425. Yeah, once you get above 425, it's a lot better. But if you do lose this low, or heck, this low, whichever one you want to use, it gets a little bit more risky. So if you want to keep that in mind for Southern Copper, SECO, looks pretty good. Looks a lot better than FCX. Let's take a look at FCX real quick. SECO, you can compare the two. Yeah, SECO looks a lot better if you want to play copper. 79.30 can push to 83. I like that a lot. And you had this nice bullish candle here on Friday too, where they closed at the highs. Usually when you get a move like that, you can definitely get some kind of follow through, high probability chances there. So 79.32 push towards 83.30. Once you break 83.30, you're looking at a push towards 90.95. Not bad. I think Southern Copper is setting up pretty nicely here. You got earnings out of the way, dividends out of the way, from what I can tell. Yeah, you got all that out of the way, which is good. That's nice. Momentum looks good. Look at this. You also got a squeeze. Might zoom into a few smaller time frames to see how the hourly 4-hour is looking. But for now, you got this. You did high compress, and now you're just in this natural squeeze, and momentum is shifting from yellow to blue here. So that could be a pretty juicy trade here. So we'll keep SECO on our radar as well this week. I'll give out some good ones. Let's see. SECO. Disney. Disney. You know, I'm more neutral here on communications in general. I say that Thursday and Friday was a pretty good day. So you got some wiggle room up tier to 56, but Netflix was kind of an underperformer Friday. You can see that like everybody had a big day. Netflix just kind of chilled, which I mean, I still have a short on Netflix. I'll probably, depending on how tomorrow goes, I may close that out. But especially with the way the market's been, I don't want to get caught off guard there. But Netflix, Disney, they all kind of look a little laggy here. Disney, you're right at the daily 200. You got a lot of dynamic supply here at about that 102. So you really can't be too bullish until you at least get above 104. If you get above 104, I'm all for it. And then you can use Thursday's lows at 98 to where's the support at next? All the way down here at 84. I mean, that could be a juicy short. What won't let you join? The pregnant nun should let you join. Hit the watch stream. I don't know why I wouldn't let you join. Yeah, Disney. I like it above 104. So you're kind of in the middle of La La Land here. But if you lose 98, yeah, that looks like a good short. You can use all these wicks as like your target though. If you want to use, you got maybe some support down here at 93, 90. You got a gap here between 87 and 80 or 88 and 87. You can use those as downside targets. But if this thing wants to flush, yeah, this would be a good candidate. If the market is weak, watch Disney or Netflix. They look like they could pull back quite a good bit. Let's see here. All right, so what am I looking at? First of all, I'm gonna be looking at obviously the bonds, SPY, QQQ, Nvidia. Nvidia's on my watch list. Hey, welcome, pregnant nun. If you have any ticker requests, feel free to shout them out, and we'll take a look at them. Yeah, Nvidia looks fantastic above 239. Once we get above 239, I mean, there's some juicy targets here. 247, 250, 253. You got a gap fill to 258. I mean, this thing looks great as far as the long goes. Apple had a fantastic day on Friday. I mean, look at this. You have that bull trap in play here, bear trap, and off you go. Apple above the highs of 151. You're targeting 155, 156. And we played this on Friday. I mean, we had that swing. No, it wasn't a swing. It was just a higher contract. And then we had we made enough off of that to play like a juicy lotto on it. And even the lotto hit over 100%. So yeah, Apple was fantastic. We're going to keep an eye on that. We're going to keep an eye on Microsoft. This thing looks pretty good. He got above all this noise here. Now we're just looking for a push above 256.40. Can climb all the way up to 262. We swung AbbVie. Going to keep an eye on that. That looks pretty darn good. If you're looking for some all-time high breakouts, look at FICO. Yeah, this is your credit score monitor people. Yeah, FICO looks fantastic. Sure, it costs 710, but if you can do split shares or however you want to do it, FICO looks fantastic. Anheuser-Busch, this is a nice little breakout here above 62. Let's go to FLR. I'm watching this one for both shares and for an options play. I want to see a pretty decent close above 37.75. We can get a close above this Darvis box. I think we got a good shot to push back up to about that 40 mark. So I like FLR. Y'all have also given me some good ones to kind of keep an eye on. If y'all use interactive brokers, IBKR, nice little move here. Looks like it's already breaking out above 89. You can use your low here as your stop between 84.60. Targets are going to be right up here at the 94.95 level for interactive brokers. Let's see. Let's go to JP Morgan if we want to watch the financials. Above 144. Let me clean this up here. 144. You got some good wiggle room, to 160. I mean, this thing looks like she can really push to the upside. I'm paying attention to these. I like the April contracts. Now that we're in March, I like these further dated contracts. Just go ahead and grab the April. You can still get away. Well, we got about 2 weeks until the monthly expirations on March 17th. So just go ahead and start looking out on those April contracts. But yeah, the April contracts look pretty good here for JP Morgan. Let's see. I like Oracle. Oracle does have earnings this week, which is unfortunate, but this setup looks fantastic. Their last earnings was, it was okay. It wasn't, bad, but I mean, the market didn't seem to hate it. So looking for a good report here on Oracle. If we break above 90, I mean, things can get pretty spunky for Oracle. Voya, we played Voya in the past. Looks like we're gearing up for another run up to about that $80 level. Vu, what's going on, man? Vu saying hello from YouTube. He didn't want to join us in the Discord. He hopped over into the YouTube. What's up, Voodoo? Hope you're having a good weekend. Let's see. NE Noble Core. No idea what they do, but it looks fantastic. Let's see here. STLD, Steel Dynamics. I mean, Steel Jesus. This thing was crazy. X looks pretty interesting above 32. Can probably see a move towards 34. There's a lot of good stuff out there. There's still a lot of good stuff out there. If you're struggling to find names out there, no, I'm back home now. Yeah, fortunately, I don't live too far away from Athens, so for me it was a short drive. But yeah, let's see. Yeah, it was good though. You need to come next time. But I think we're looking at doing a meetup in Texas at some point. Let's see. So let's see. We are right at an hour. We're over an hour actually. Any other ticker requests before we kind of dwindle this down? Voodoo, you got any ticker requests for me over there in the YouTube land? Give you a minute. X gonna give it to you. Yeah, X looks pretty decent here. Nice little uptrend. You got earnings out of the way. I think this thing can really push 33, 35. If you like STLD, take a look at X. Yeah, SPY. You had this beautiful trap down here at the daily 200. They tried to flush it down, couldn't. I mean, if this thing flushed, I mean, you could see how much room we had all the way down to like 380, 377. But market had other plans. Thank you to Mr. Bostic there. That definitely helped some. So we held this. As long as we don't break the lows here, you can be bullish. Your overhead resistance is going to be, let's see, this 404, 407, and then once you get towards 414 to 418, it gets a little bit more hazy. You got a lot of supply up here for the most part. Once you get up here, there's a lot of supply. But for the most part, 407, 410, and then 415 up ahead. But yeah, you definitely don't want to lose 392 And then you also don't want to lose this daily 50 at like 397.60, 398. So this would be your first line of defense. This is your utterly must hold the fort down if you're a bull. And this was pretty much the same plan as last week. If you lose this, you got a nasty ways to go. Yeah, Thursday and Friday was just absolutely wild. Bull traps, excuse me, bear traps. They're everywhere. Bear traps are everywhere. You can see them in the bonds. You can see it in the indices. Ugh. Question is, how do we handle a pullback? That's the main like what's what's going to happen here. And if we want to look at the futures right now, kind of sideways, but you got this nice little push to the upside. Nice little flagging pattern right now, trying to shape up. Maybe we can push towards 4,100. The dollar right now is flushing on that as well. So once you push below 103 on the dollar, I mean, you're very bullish at that point. Load up the longs, buy the dip. Buy the dip. Have some fodder. Yeah. All right. Well, I appreciate y'all hanging out with me this evening. Hope y'all had a great weekend. Look forward to meeting y'all at some point in the future. Yeah, Johnny, you're late. Why are you late, young man? SCCO. We did SCCO. We'll do it again. We'll do it again. More cowbell. SCCO. Looks great. Oh, that was me? Yeah, we did SC. Above 79.32 looks fantastic. You got earnings out of the way, all that kind of good stuff. Copper, it's doing okay right now. So if you want to use SCCO as your play there, looks great. 79.32 to 83. Once you break above 83, you got a good push to 87.90 levels. Just don't lose your levels here down at 72-ish. Ideally, I wouldn't want to lose that level. Newmont. Yeah. Not as pretty as what it once was. So you had this nice little move here. You broke this channel, moved to this channel, back down you go. Let's see. Let's clear out a bunch of these lines that don't make sense here. All right. Well, you don't want to lose your low here at 43. If you lose the lows, I can see where this thing flushes a little bit more down to 40. You can probably stair step it up here, all the way up to about 45, 46. That's your daily 21 at least. I think once you get up here to 45, it's a possible new short. I know I didn't really talk about gold too much. Let me see if there's anything worth. Let's go to gold. So GC, let's see what it's up to. You got that. Yeah, trap here, every bear, trap. So look, they tried to flush it here, couldn't push it on up. They tried to push it up here, couldn't flush it down. This is on the weekly chart here. This is kind of messy. All right, so if you drew that line here, yeah, there's your trap. Now you're pushing back up. If the bonds become more playable, I think gold can also be a little bit more enjoyable. I guess you could argue this is like a smaller inverse head and shoulder if you want to argue that above 1854. So if you continue this push here, yeah, try to push up towards 1900. Let's see, you could do your measured move here too. If you want to, just do your short. long 3 point there. Yeah, look at that, 1900. That looks like a good long there. And then you just use the lows here at 1813 as your hard stop there on gold, and then you can use that to help you out with your individual names. PLL, yeah, they did fine here. You got a lot of supply up here. 70, 75s on it might be a little bit sticky around here on PLL. Let's see what's another one. ALB. ALB. Let's see, you had the nice little rejection at the 618. Came back down. Let's see. Yeah, it's a little bit better here. I prefer ALB over PLL. You still want to get over 261. Above 261, you can probably shoot these highs here. 285. And then use your low here at 241 as your hard stop, because if you lose 241 right here, man, yeah, you get a flush to like 220, 215. Not bad. If you wanna play some gold names, yeah, I think Albs is a little bit easier here on the technical side. D on positive pushing up, momentum shifted from red to yellow. That's good. I don't like this large volume fade here, so you could very well. I might have to watch this at 241. Did I talk about? No, we didn't touch base on Tesla. We'll take a look at Tesla. Tesla. All right. So they try the same situation here. You're just kind of sideways. They tried to send it down, couldn't. Investor day was a sell the event kind of day, it seems, but it's still resilient. I mean, this thing continues to trade really well. I think we get a good chance to push up to this high at 217, 220 zone. You can see that's where the daily 200 is right here. So I think there's a good possibility that we get here, but there's a lot of supply here. 220, there's a lot of supply. And then if I want to short this thing, I'm definitely going to use this low here. Let's go ahead and remove that. We're going to use this 186 level as our short trigger. Short below 186 and push it on down to really 160. So it's got a good ways to fall here if we lose support. But you got a nice little room. I think this makes out for a good day trade here and there. Crazy talk. Yeah, I need to go back and like listen to it, but from what I've heard, it's a little wackadoo. It's a little wackadoo on the Tesla talk. So yeah, overhead resistance 217, 220, support 186, lose 186, you flush. I think you got a good chance to push 217, 220, but we'll see. I think it's one of these moments where we need to take it on a day in, day out basis. Inside week, you didn't really break anything. Yeah, I'll be live tomorrow. Yeah, I'll be on tomorrow morning for sure. Monday, Tuesday, not live Wednesday because we work on other projects Wednesday. Yeah, I'll be live tomorrow morning. TLT, yeah, I don't look at TLT a whole lot, but I use other means. Yeah, look, you still got this. We talked about the bonds earlier, but you still have this dynamic here. Kind of like the HYG here. You really want it to get above this like 104 mess here if you want to be super bullish. But look at this trap that they set up. You had this bottom tradable low here at this 99 mark, and look, bear trap. Mwahaha. They try. Bears got clapped so hard Thursday, Friday. It's not even funny. It's real. Yeah, it's wild what happened Thursday, Friday. I mean, if you're a bear, I mean, think about the psychological battle there. You flushed it, and then the Bulls said, "Mm-mm, we're here to play ball," and they brought it back up. So TLT, yeah, TLT's in this interesting spot here. Bear trap play, nice little trade. Now, if you lose Thursday's lows here, yeah, I think you can just like we with all the other bond names, you can flush on the if you break those lows. But for now, you got a nice little trap in play. So Thursday's lows, use them to your advantage. Dollar below 105 looks good. VIX, I know we didn't talk about VIX because there's not much to talk about as far as the VIX goes. VIX, if it gets above 2021, I'll be interested as well there. There's a lot of things that we can kind of keep in mind. But all right, I've gone pretty long here, so we'll kind of cut it there. I'll get these notes sent out so everybody can have them. You can have my levels and the key things that I am looking for this week is pretty self-explanatory, nice and easy, which is nice. Makes things a lot easier on everybody and just in general, keep things simple. Keep it simple, stupid. All right. Y'all have a fantastic evening. I appreciate y'all hanging out. I know I only got a few of y'all in here now because it's gone so late. But yeah, y'all have it. Have a good evening. I'll see you guys in the morning. Take care. See you guys.